Yo, what's up, man? It's your boy Precise Thoughts, man. And I was just sitting here just thinking. First of all, shout out to my followers. I got some new followers. I got Clark Dale. I got Sharman Walker, Bobby Woods, Lashonda Living Testimony, Latrice Red. I believe that's Michelle. What's up? Shout out. Lolo. That's Lolita Parrish. Jessica Walker. Moats, Celia McRae, LeBron Nash, Amanda Jones, and Live, Laugh, Love as my new followers. I appreciate you guys. I hope everybody can hear me clearly. So basically today what I wanted to talk about is investing, and that's what I've really been into for the last couple months. I've actually been investing over 5 years, but during COVID, as we all know, there was an explosion of new investors, and basically I became one of those people that really dug in and really learned a lot and read a lot of material about investing, and I began to actually become an active investor outside of my 401k, outside of Acorns, which was the first basically app that I used to use to add money into my investment account, on my own, right? And even with my initial analysis of using Acorn, I saw the advantages, okay? When I would look at my report on my 401k for the year annually, just working various jobs and whatnot that offer 401k packages, I would see the amount of the returns usually around from 5 to 10%. And Acorn definitely was getting around more like 20%, being able to adjust the aggressiveness of my investments or become more conservative and diversified with my investments. So if you're a beginner and you don't really want to, or I don't want to say care, but don't care about the having control over which companies you invest in, Acorns is a great app to start off with. Also for children, I think they may offer a child account. I'm not exactly sure, but I know, just for yourself, if you're an adult, you definitely could use Acorn. And some of the features they have are when you make transactions with your debit card from your bank, you can have the remaining round up from $1. You can have that change put into your Acorn account, and that helped me save and grow a lot of money. Let's say back when I was working at the DMV in California, shout out to the DMV family that I used to have when I used to work for California State. And that's when I started Acorns back in like 2016, and about 5 years ago. And so as I began to look at the money grow, and that kind of put me in a mind state of seeing that money be placed in a fund and growing. The thing about it was I didn't have the discipline. I did, kind of start the mindset off, which was good, but I didn't have the discipline. So whenever I was low on money, I would just take the money out, whether it was $40, $100, $200. Once I saw that much money in there and I needed something, I want to get something from the store, I want to go to the grocery store, I want to do this, do that. Most of the time it were things that were definitely not needed or required of me. They were just, I don't know if you want to say like luxury purchases, like going to buy a hat or going to buy some clothes or whatever. Things that I definitely didn't need but wanted. More so, didn't have the discipline or the control or even the want to control my finances in that way. I would just pull the money out. But it was nice to have that extra money available. Not only that, of course, a lot of it wasn't even extra money. It was just money that I was saving that I wouldn't have already saved had I not had that set up. The Acorns roundup. I don't know if that's the correct terminology for it, but that's what it is. I still do have an Acorn account. I do not fund it regularly, but I do have some money sitting in an account that's diversified among some companies, and I've just been letting it sit there because I didn't want to close it out. Um, but anyway, yeah. So moving on to Robinhood, that I got into just maybe 20. Well, I guess I had an account for a while, but never funded it. I think I funded it in 2019, probably initially, and then really started becoming an active investor because I don't really trade. I do a few swing trades, but I really became an active investor, I want to say, in 2020. Once COVID hit and we were home, I was able to look at my finances and my budget and say what I'm saving from not going to work every day. Going to the food truck every day, eating lunch and eating breakfast every morning, and outside of home, you know what I mean, and just driving, the gas, things like that. I took a real look at my finances and I said, wow, these things can go up to from $200 to $400-$500 in a month. And of course a few months had went by, and there's money in my account, so I'm like, well, let me do something with this money, versus just eating out with Grubhub and Postmates and things like that, delivery, and going to the store whenever I want to. I'm gonna see if I can make my money work for me. So I started looking up videos and I started reading material on investing. A lot of this stuff I did know, but to get a refresher on it, to get my mind right, I did go back to the basics, and I just began my investment in journey. $5, $5, and then I'm gonna tell you how it went for me. Now, mind you, this was an unprecedented time in the market, so a lot of companies were growing at an exponential pace. So a lot of these companies, would not have had the same growth at any other time in the market. So it was just a good time for me. So basically I'm getting into the market and I put $5 in, and boom, I get a quarter the next day and I'm seeing it grow. It's green, and I'm like, my mind starts turning, the gears start turning, and I'm starting to see incremental returns on my investments. This was good for me. Then I started saying, well, had I put $10 in, I would have got 20 cents back. Okay, so now I'm able to make it a quantitative thing. I'm able to look at it and see the math behind it, right? It's something that I can clearly see. So I'm doing some analysis and I'm studying the market history, and I'm like, well, what if this thing crashes? So, historically, when the market crashes, you can tell that you can see the percentage decreases relative to what it normally increases at, right? So basically what I'm saying is, if the market's average is 10% yearly, a crash may be considered a significant decrease in that amount, right? 2%. Let's say the market was a 2% return. Of course, this is a diversified estimate, right? So this is every, whether you're doing the Dow, the S&P all together, each industry, however you want to look at it. Quantitatively, as a whole, the market is usually up. Even during crashes, maybe 2 to 3%, 5% is may be considered bad. So let's say a 50% market crash based on an annual return rate would actually be 5% if you're averaging 10%. So that means the market is still up 5%. Now let's take that into consideration with a bank account. If you have a bank account and you had your money sitting in that bank account, if you don't have a high yield interest account, which is not always easy to obtain, and high yield interest accounts may even be considered as low as 2%, 3%. Some are higher, you would have got that 2 or that 3%. But let's say it was a normal stock year, you would get 10%. Your 401k might produce 5 to 10%, right? So you get a lot of pullback and resistance about investing from people who don't have the knowledge and they know about market crashes and a lot of the negative aspect. But that I just wanted to talk about how, your mindset needs to be, you got to have some facts based off of it. You know what I mean? Do your research. I would advise anybody to get into the market, and start off, start small. You have apps like Robinhood. I'm now currently using Webull. I also use Ameritrade for a lot of my OTC that's out the country or over the counter stocks. Also, what else do I use? Stash, pretty awesome. You could even use Cash App. You could even use for crypto, there's Coinbase, and I'll make videos talking about crypto as well. What you can see in my background here is going to be some things that I'm going to be talking about in the future. My NFTs. These are my non-fungible tokens. This particular website is NBA Top Shot. I do own a few moments on this website, so I just got this up in my background here on the website here. And I'm looking forward to doing more videos about NFT information. I did do one earlier today. I'll be posting much more frequently now that I really do have something that I'm super passionate about. I did start this off talking about finances and things you can do during quarantine. As you can see, I have progressed a lot. Investing has changed my life. It has funded ad campaigns for me with passive income. It has funded a shoe line that I've been able to partner with Alive Shoes with. It has funded just some amenities for my life, that I'm not even taking profits. This is passive income that I still have profit that I'm budgeting strictly, that I'm reinvesting. So I'm able to reinvest a bulk of my money, and then passive income is also utilized to fund a lot of other things I have going on. I game stream. I'm a music producer, and those things don't tend to generate a lot of income for me at this time. I do need to be more consistent. Also, what else am I involved in? Writing and things like that. So I do want to finish my ebooks, and I want to present my courses and things like that. So a lot of the funding for that stuff has been through investing, guys, and I want to talk about investing a little bit more specifically, but I don't want to make this video too long. I just wanted to come to you guys and let you know I'm still here. I'm still doing it. For the last, I want to say 4 or 5 months, when I really slowed down on some of my other activities like game streaming and things. I was really bearing down, really knuckling down and digging into investing in the various aspects of which include crypto. Currently, I'm into NFTs right now, and of course stocks and ETFs and funds, things like that. So also credit building. I want to say that investing has kind of afforded me the opportunity to invest in my credit, to build my credit to a better level. I've actually received money to give advice. I'm not a financial advisor. I do want to say that. So that's my that is my disclaimer. But some people kind of I want to say donated money to me or whatever, just to get some information and to help them with getting started with investing. So I'm not really into right now taking money from anybody or nothing like that. So, but yes, I do plan on having my YouTube channel grow, and hopefully that becomes a source of income. So like, share, and subscribe, please. It's your boy Precise Thoughts coming at you with another video. I'm really excited about revamping my channel. Of course, I started this in 2020, last summer, ended it around October-ish, and really put my nose to the grindstone and been studying a lot of different things. Also, I dropped about maybe 50 tracks, so 2 projects and a host of just singles instrumentals that you can find under Precise Thoughts, spelled just like it sounds, PRECISETHOUGHTS. Apple Music, Spotify, Google, everything. Amazon Music, all streaming platforms. So you can find my music on those platforms, streaming everywhere, and you can check me out there, and also follow me on all social media platforms. That's at Precise Thoughts: Facebook, Twitter, Instagram, of course YouTube. I do have a music page as well on YouTube, but I'm not gonna make this too much longer as I'm at about 16 minutes. So just want to let everybody know I'm back. I'm good. I'll be more consistent, and thanks for checking me out.